Did the Fed just flip the script on interest rates? Casey, if this past week was a basketball, soccer, football game, it would have been the playoffs. On Tuesday was the concern that inflation was nagging and that the Fed might actually talk about a potential rate hike this year, because this number right here, the Fed said is it has to get down to 2%, and it's at 2.8. It's lagging. It's slowly coming down, but it's not making the progress that everybody wants it to make. So that was Tuesday. We're in the red. Wednesday, everybody was concerned. We're coming into the day and we know that the Fed is going to meet with the press. What's he going to say? And he all but says that a rate hike is off the table for this year in 2024. And that the Fed is going to reduce their balance sheet reduction. Now, what is that? This is quite possibly something so sexy that nobody cares. That's how sexy it could possibly be. Do you see this? This is the Fed's balance sheet. The Fed went on a huge spending spree right here, $3 trillion in 2020 during the pandemic. And that is why interest rates got down below 3%, or like a little bit below. And you'll see here that they stopped buying stuff. Let's just call it stuff. It's treasuries and mortgage-backed securities, but to you, Case, like to me, to most people, it's just stuff. That is big news for mortgage-backed securities, for interest rates, long-term mortgage interest rates. Why? Because there's going to be less supply on the market, and that could be really good. What does that practically mean? Maybe like 0.25%, maybe 0.5%. Could be somewhere in that range by the end of the year. So where are we at right now? This is the question. Today, average rate across the country, 20% down, good credit, 7.28% on a 30-year fixed mortgage is where we're at today. So Wednesday, the Fed announced that they're going to reduce their balance sheet reduction. And then what happened, Casey? We got the BLS jobs report, which came in below expectations. It was a weak report. And in fact, the unemployment rate went from 3.8% to 3.9%. What does this mean for us? Well, the Fed has said that they're not going to lower the Fed fund rate until one of two things happens. Inflation comes down to 2%, or unemployment hits an unexpected number. What's unexpected to the Fed? Well, we don't actually know. They didn't define it. They were like dancing. I don't know if it was a tango, a salsa. They're like, well, we know, but we don't know. We're kind of sure. We're not sure. 7 of the members on the voting council of the Fed basically said, we think unemployment will stay at 4.1% or below. So can we make a maybe educated guess that if this hits 4.2%, maybe that would cause the Fed to start lowering the Fed funds rate? Okay. That is what happened, Casey, Monday to Friday. Now, we also got the Case-Shiller Home Price Index report this week. And this is backwards looking. It's a little bit, so it's for the month of February. So that was a couple of months ago, but it comes out a few months after it's released. Look at this, Casey. Year over year, nationally, home prices are up 6.4%. Can you believe that?
Wow.
That's some incredible appreciation, right? We're seeing homes continuing trending in upwards in value. And what does that mean for you? If you're wanting to purchase a home, if you've been thinking about it, home values are continuing to go higher. That means there's not enough supply, and there's lots of people that are still wanting to purchase a home. And look, even another year further right now, forecasts for 2 years from now are roughly around 5%. So it was an action-packed week. Now, with that all said, we have had this coming up more. Nobody likes bidding over asking price, right? And Casey, have you seen the market be competitive out there? Are there multiple offers?
Yeah, I would say in most cases, we're looking at multiple offers.
Okay. Yeah. And so, while there's a lot of ways for you to create a competitive offer, one of the ways that you can make a more competitive offer is by increasing your offer price. But I don't know about you, Casey, when I was shopping for a home, at a certain point, it got so stressful and it was like, it felt like monopoly money, right? And these numbers were just overwhelming. Like, why would $20,000 over asking price? It's like, what am I doing here? This isn't just play money. I can't just make this up. And so I got 2 pieces of really good advice. when I was trying to buy and I couldn't have peace. And one of them was to look at how quickly the home would appreciate to the value of what I was bidding over the asking price for the home. And that helped give me a lot of peace. The other advice was to look at the monthly payment difference. Instead of thinking about it as $10,000, a lofty number that was so hard to like wrap my head around, or $50,000 or $100,000, whatever it is in your market that people are escalating, but instead to think of it as a increase in monthly payment. So let's say today it might be like $68 per 10,000 or 73 or somewhere in that range, around like $70 to $75 per month per $10,000. And we actually work out that number for every client and give it to them as peace of mind. So how could we know how quickly the home is going to appreciate if I'm going to offer more than the asking price? We have a tool for that. We got you covered. That's right. So if you're wondering, if you've been curious, we actually went through and we wanted to pull up an example for you. So this house just got listed 2 hours ago. This is here locally, Woodinville. It's really in the Bothell area, I think, but maybe you could say North Woodinville. Pretty nice looking home. Casey, wouldn't you say 1.248 is where it got listed at? We just wanted to show you quickly here what this tool looks like for bid over ask. So we said if you were to offer $50,000 above asking on this home, which could be, and in our area specifically, we've been seeing 4% be quite normal. To give you some frame of reference, in 2021, 2022, we saw bids over asking between 10% all the way up to 20. It was a little bit crazy, but that was a little extreme. Right now, more often, we're seeing maybe more commonly 4%. This isn't an exact number, an exact science, but like this has been more common. Okay, so we're able to break that down. And so what that means for you, if you are putting an offer in on this house and you offer $50,000 above asking, to make sure that you get it. Based off of historical averages, it would take a little over 10 months for that house to appreciate in value to the point of what you paid for it. And over 5 years, if you paid 1.298, let's just call it 1.3, in 5 years, based off of historical averages, here's the 63-year historical, Casey, 5.77% in our area. Here's the 5-year forecast. It is 4.19. It would be $1.5 million, 1.533, which means it would come out ahead $234,000, even though you paid $50,000 above asking. And here's one other way to look at it. If we just look at it as a graph over time, here we go. We're starting by overpaying by $50,000, but look how quickly by the end of the first year, you're already up $22,000. Is this something that would help give a little bit more peace, Casey? Peace of mind?
Oh, absolutely. Absolutely.
Yeah. So if you would like this, if this tool would be helpful for you, reach out to us. We've got this available for you. So homes continue to appreciate, values continue to go up, real estate continues to be a great value, but Casey, it's still hard. It's hard to sell. It's hard to imagine. Like, if I sell, where will I buy? How will I buy? The craziness of the two in between. And we've been talking about this, and we continue to mention it, but we know that it's really important to have resources at this time. So do you want to take us through, Casey? If you have a client that's on the fence, that's struggling to think through, like, how am I going to buy before I sell? Or how am I going to buy and then sell right away as being contingent? Do you have resources for clients? What tools are available?
Yeah. So a lot of times when I'm talking to clients about their options, if you need to sell your house in order to buy the next one, a couple options you have that have worked out pretty well is to do something called a rent back, which means the deal on the house closes, but you then rent back from the new owners of your previous home until you can find your next home and move on from there. And because there's not that many homes in the market right now, a lot of times buyers are willing to give you that time as like a negotiating tool, so we'll give you that time. Another thing you can do is just simply put everything in a storage pod, go and this is more for clients that want to move maybe out of state. They're not yet sure what city in this new area they want to be in. And so a lot of times they'll just sell their home and then they will go and live in various cities doing like Airbnb. Some of them do like month-long stays and see how you feel and where you want to land. But then there's a third option, Matthew. Well, there's actually even more options of that. But the one we want to hit on today is with a bridge loan, which actually has a great opportunity to prepare your home for sale and really get the most amount of value out of it without being on a tight timeline. So Matthew, if you want to explain a little bit more of that for us.
Yes, Casey, traditionally bridge loans, they've been this unicorn product where they sound great in theory and they don't work. A functional one doesn't exist until now. We've got it covered. We've got a new product that's helping people to buy before they sell. Imagine, Casey, you're thinking about the stress of like, I got to list my home right after I get an offer accepted, and it's the stress, and I'm going to be in the house, showing the house to it, open houses. We got to pack up. We got to list it. We got to get out. We haven't even had time to clean. Now you can buy before you sell by utilizing this bridge loan. Usually, historically, Casey, bridge loans have not worked because you have to qualify off the existing payment, the bridge loan payment, plus the new payment. With this new program, and that kills your buying power. So now you can qualify with just the new home payment, and it gives you the freedom. You have 6 months, 0% interest, 6 months to sell your home. You can buy a house, you can move into it, you can clean up your old house, stage it properly, get it ready to sell, list it with strategy and tact, and like get the most out of your listing and get as much value for your home as possible. And all of that, you're able to do it stress-free by utilizing this product. And a lot of folks, we've gotten a lot of feedback that you can actually get more value by taking the time to stage it, list it, present it, all of that. In fact, you can even use $35,000 of your equity to either pay off some of your debts, like your credit card payments, maybe part of a HELOC, so that you can qualify for a higher purchase, or use up to $35,000 to prep your home, stage it, paint it, clean up the yard, make up that curb appeal to get more value for it. And these are things that offer that. And we can go into pricing if this sounds interesting to you. Feel free to reach out. We have this as a solution, and it's been really helping clients bridge the gap and take the edge off the stress. Casey, have you found that is there value in this? Like is it better for clients to stage their home, fix it up? So, and I'm not trying to ask a dumb question. I'm actually being real here. I'm trying to ask, is it really significantly different? Like,
Yes.
Is there a big difference between just like being contingent, like getting out and listing the home price, listing the home quickly and just getting it sold versus, painting, landscape, staging? Does it really make that big of a difference?
Yeah, I think it was Forbes magazine. They came out and said that on average, staging done really well, photography done well, can add up to 17% of value to the sale of your home, which is huge, but it's actually true. When you have a home that may be in like the middle of the road, it's not completely renovated yet, but you get in fresh furniture, you give it a fresh look, you make the outside look, get some beauty bark in there. You can elevate the look of your home quickly without spending a ton of money. And honestly, like I almost can't even say enough how much that adds value to the sale and also how fast your home can sell as well.
It's great feedback. So if this is a product that sounds interesting to you, if this would help you in a situation, we're here as a resource for you. Obviously, we're here to help you hit your goal.